Do you know what really screwed investors last cycle? The FTX collapse. That was pretty effing brutal, to be honest. The Terra Luna collapse, the lender collapse, NFTs. There's a variety of pain that was experienced, but what left most holding the bag was the illusion that we'd simply rise forever, thinking 10x gains were just the start. Now, treasury companies are stacking sats and ether like there's no tomorrow, fueling speculation for an extended cycle theory, as you've probably heard discussed here many, many times. The broader market's also teeming with excitement right now. IPOs are coming back. They're making money, baby. Chamath's launching a new SPAC. It's going to be a good time. Stick around. I got a lot of things we got to dig into in this video, okay? So let's rewind a little bit. In 2017, the cryptocurrency bull market was driven by initial coin offerings or ICOs. Oh, those are the crazy times. People were raising billions on just ideas. Projects that raise capital are offering their tokens as some kind of type of investment, like a Kickstarter sort of thing was ETH's first big use case. Of course, a lot of crypto investors flocked to this model. We were flipping ICOs back in 2017. It was a good time, simpler time. You know, we had ETHLend, which became Aave later, and Chainlink. All stuff started back then. Anyway, people were doing 100Xs in a day. It was crazy. In 2017, more than 800 ICOs were launched and raised over $5.6 billion in capital. Most of that was EOS money, by the way. But anyway, some projects raised millions in minutes. Filecoin, Tezos, these are some of the big ICOs of the period. By 2019, instead of minting millionaires, over 80% of the ICOs were considered to be completely dead or scams, and they were never coming back. Of course, again, we got a few gems out of all that bullshit, but there was a lot of bullshit, as there always is in crypto. Today, we don't have that ICO action compared to 2017. Maybe you could say meme coins are some kind of parallel to that, but a lot of people are insisting that crypto is now mainstream, and it's more following the general market, not these sort of flash-in-the-pan hype moments that we had previously in the market. So it makes sense to look at perhaps what the IPO market is doing instead, and the tech IPO market looks very lively. For example, Figma tripled on its New York Stock Exchange debut, 250% up in one day. Circle, of course, soared like 168% on day one. That was a crypto IPO. Bullish, another crypto one, doubled out of the gate. Even Chime and eToro popped 37 and 29%. Well, CoreWeave is already up 150% higher since March. Wall Street has been waiting years for this, and IPOs are coming back. So it must be the top of the market, right? No, that's not even close, of course. And I know we've had inflation and interest rates and political drama all poured cold water on IPOs for a long time, but IPOs are back, which means risk appetite is back. Now, venture-backed tech giants, some valued over $10 billion, are lining up to go public, and there's going to be a lot of IPOs in the next year. And that's not all, because it looks like SPACs are back. Chamath Palihapitiya, the SPAC guy, a venture capitalist, early Facebook exec, all in podcast hosts, all that stuff. Super rich dude. He's rolling out a brand new SPAC. It's like 2021 all over again, baby. We got another Chamath SPAC. Let's go. What the hell is a SPAC, Lark? It stands for Special Purpose Acquisition Company. Basically a blank check company that looks to find another company to acquire and take public. It's kind of a trust me bro model for stocks, if you will. Investors throw cash into something without really knowing what the exact business plan is going to be, hoping it doubles or 10x's their money. But here's the catch. Back in the 2021 boom, nearly half of all SPACs ended up being liquidated, according to a Better Market report. And yeah, that risk has not gone away. SPACs and IPOs coming back into fashion is a sign, though, that risk is coming back into the market, which is a good thing if you're investing in risk assets like we are. You could even throw the digital asset treasury company trend into this as well, because it's very much part of that stock market frenzy around new products launching. The money's there, and people are saying this is the top signal, Arc. It's all over. Look at this. No, it's not the top signal yet. The top will come, but we have a lot of IPOs and SPACs and more digital asset treasury companies coming through before we get into that. Now, before we get into the next part of this conversation, guys, if you're trading cryptocurrency coins, I know that's you. You need a good place to trade at. That place is BitUnix, where I'm doing a lot of my futures trading these days. You can join me over there. It's a great time. Long the rips, short the dips, no VPN, no KYC, no bullshit, available to anyone, anywhere. That's you. If you use link right down here, it's right there. Go check it out. Hit that link, and guess what? You're going to get some insane bonus just straight off the bat, up to $400 cash back. That's crazy. Deposit $2,000 to get $400 cash back. Nuts. Insane trading bonus, up to like $8,000 plus 3 ETH. I mean, that's crazy. Who does that? This is insane bonuses, and you'll go straight to VIP level 3. So it's a 30% fee discount. Go check it out. Link down below. Start trading the way you should with freedom. Now, a lot of people are going to look and say, hey, look, Lark, this is all great. Look, realistically, one of the reasons why the recession was kept at bay was really just because of AI and the Magnificent Seven. Everything else is kind of bullshit. Doesn't really matter anymore. But going back to the 1990s, something pretty similar happened also. This was the time when dial-up internet. Oh, do you remember dial-up internet, man. Waiting 15 minutes to download some boobs. It was a great time. Anyway, if you don't know the agony of waiting for dial-up to connect, then I envy you, okay? Those are crazy times. Anyway, during this time, internet companies were being put up left, right, and center. It was like Krispy Kreme donut production line, but for tech companies. Pets.com and all this kind of bullshit came up. The poster child of the excesses of the 90s. And we all know that bubble popped big time, right? Today, tech giants like Meta and Nvidia have seen their values absolutely go insane while investors wait for companies like OpenAI, Perplexity, and Anthropic to go public. Many analysts are calling this the dot-com bubble all over again. We just can't learn from our previous mistakes. We just have to keep throwing money at shit, don't we? Torsten Slok, chief economist at Apollo, put it this way. He said, the top 10 companies in today's S&P 500 are more overvalued than they were in the 1990s. For example, Palantir, one of the darlings of Wall Street right now, has a PE ratio, or price to earnings ratio, of over 500. That's great. That's crazy, man. For context, the PE ratio measures, by the way, how much investors are willing to pay for each dollar a company actually earns. A good PE ratio typically falls somewhere around 20 to 25. And tech company valuations get pretty silly, to be honest. But let's just use that as a metric, okay? Above 50 usually means things get a bit crazy. 500 is like, what the heck is going on? So why are people paying so much per share for Palantir? Speculation, baby. It's just speculation. People love it. That's what we do around here. Investors are speculating that this company will be dramatically bigger in the future, and they have to have a piece of the pie now. It's not just one company, of course. It's a lot of companies. Analysts warn the entire S&P 500 looks pricey, flashing an above average CAPE ratio. That's the Shiller PE, a metric that smooths earnings over 10 years and adjusts for inflation. It's also screaming overvaluation at this particular time. The housing market, of course, looks super shaky. High mortgage rates. Jerome Powell won't lower the damn interest rates, so housing markets are pretty much stuck. Builder sentiment is rough right now. Some experts warned the bubble could pop in 2025, some even comparing it to the 2007 crisis. Going to the crypto side of things, it's been frothy. Hasn't been crazy mania euphoria, but we've had some froth. We had dog coins go to billions of dollars, guys, okay? ETFs and treasury companies pouring billions of dollars into the crypto space on a weekly basis. The treasury companies for like stupid altcoins and meme coins are popping up. It's going to get real messy. I know there are some outflows in the recent week and whatever. Sure, that's going to happen. That's the normal part of the process. But the ETFs are doing really well if you zoom out and look at the higher time frame picture. For example, Ether ETFs reached $1 billion daily inflow for the first time this August after basically being completely ignored by Wall Street at the start of the year. The US BTC ETFs now hold 6.1% of the supply of Bitcoin, worth around $150 billion. Now, you might say, stop's not here. Retail's not here yet, baby. Coinbase and Robinhood apps are still in the 20s in finance apps, meaning that there's not massive euphoria right now in the crypto space. And I hear you. First half of the year saw total exchange trading volume reaching $9.36 trillion, the strongest first half since 2021. And we all know that 2021 was, of course, a great year since BTC reached its cycle high of 69K there. However, obviously we had 2022 happen. That was pretty crazy, right? Things are frothy out there. A lot of money's pouring in. A lot of speculation's pouring in. Must be the top, right? It's all over. Don't you know about the 4-year cycle theory anyway, Lark? It's all about to finish, Mal. So should you sell? Well, obviously you're the only person to answer the question whether you should sell. And if you have money on the table, it's never a bad idea to take some profits. But let's just zoom out a little bit. Yes, it's true that IPOs and SPACs are heating up, but in 2017 and 2021, those are different times, okay? It's the same kind of frenzy starting to heat up, but this time there are clear regulations, real revenues behind these companies, and we're just getting started. Like, we've only had a few very successful IPOs. We're going to have dozens, hundreds potentially. In fact, ARK Invest CEO Kathy Wood said in a CoinDesk interview that we've got a lot of fuel left in the tank. Today is different because of the breakthroughs in tech. Instead of hype, we have innovation. Investors are more cautious these days as well. They're not throwing away money blindly like they did in times previously. Institutions and retail aren't stacking magical internet money anymore. Rather, they're stacking Bitcoin as a hedge. Things have moved on. The market's matured. It's become a real asset class now. You're a real boy now, Bitcoin. They stack Ether because they know the smart contracts are the future and stable coins and all that stuff. The Genius Act made sure that, sure, again, the markets are maturing. Things are changing. And if we're strictly looking at the broader market, then the business cycle Sorry, but it is far, far from over right now. Fidelity says that the U.S. is still in the late expansion phase. Carson Research, we mentioned them a few times on the show here, but they say that this cycle is still young at only around 32 months currently, citing that the average cycle lasts 67 months. We're only halfway, guys. We're only halfway. AllianceBernstein, major analyst company, they think 2027 is when we top. Can you imagine the stink around here if we have to go to 2027? Personally, I lean towards an ending more like this. Now, we could see a local top in some point in 2025. I think it's relatively likely. A lot of people say in 2026 will be the end, mid-year sometime when global M2 stops pumping. Maybe. I'm open to that. And of course, the most contrarian take, obviously, is that the cycle is actually just heating up and things are going to get way stupider than anyone thinks, and that we all just have PTSD and can't see the writing on the wall in front of us. There are literally going to be hundreds of IPOs. The AI, crypto, robotics bubble is going to last for years, and it's going to be bigger and stupider than anyone can think. A repeat of the dot-com bubble, okay? And we're not in 1999 right now. We're in 1997 right now, okay? We have 2 years of stupidity in front of us, of overvaluations are going to be so utterly dumb, it's going to make you question reality. But just remember, it's just a bull market. You're not a genius. Remember that. And here's a thought. If equities are going to rally till the end of the decade, then why is crypto just magically going to fall off a cliff at the end of the year and go to zero for 4 years? Does it make sense? At the asset maturation phase of the market with everything going on in the background? Look, it's important to look back what's happened in the past for markets and stuff like that, but no one's got a crystal ball what's going to come next, right? So make sure you have a plan to take profits and at least secure, part of your capital and all that kind of stuff. Never know what's going to happen, right? But when you look at everything that's happening now, it is a pretty compelling narrative that things might go longer and crazier than we think. Again, maybe I'm totally wrong here, okay? But just because we're starting to see some heat finally coming back into the markets and stocks and IPOs and SPACs and stuff with the digital asset treasury companies and stuff doesn't mean it's the top necessarily. In fact, it could just be that things are starting to heat up and we all have so much effing PTSD from all the bad shit that's happened previously that we can't see that we're entering a new phase in the cryptocurrency markets. I don't want to talk about super cycles here because that's just crazy talk, right? But an asset maturation phase of the market, that the institutions finally did the thing we thought they're going to do in 2021. They showed the F up and they're here now and they're buying. For how long that buying pressure can keep going remains to be seen. How much retail will come back in and buy the bags from these guys in the future remains to be seen. But we're at a very interesting phase of the market right now, and I think we're very far still from the top. Thanks for watching.